All right, so we're going to kick off today looking basically, I want to take a look at waves and oscillators and see how those two can reinforce and help each other. Basically, though, we are in this webinar looking at 3 steps to trend and momentum, patterns such as wave patterns. Yesterday we looked at Fibonacci patterns, support and resistance to understand the market structure in more detail. Then when I've completed that, I understand if the currency pair is interesting or not, or maybe it's okay, but there could be, I'd rather look to other pairs to see if something else is interesting. When I establish basically kind of a short list and find the most interesting pairs, then I dive into what decision zones are key, what kind of triggers do I want to see there, and what reward to risk is potentially possible at those levels. Alrighty, so today is Wednesday. Today we have the stress test on the British banks. We also have, let's see, some news, of course, here as always. Typically, you have a lot of news events, some less important, some medium, some more important. One of the more important ones is, for instance, the unemployment change in Germany, unemployment rate in Germany, 6% at the moment. Let's see how the German economy is behaving itself, or performing, I should say, better said. Otherwise, today you do have ADP in the US. And there was one more event I think that was important, CAD GDP. I'm not sure. Let me go to fundamental analysis quickly and take a look here. These are the key events of this week. Oh yeah, the OPEC meetings on Wednesday. That's today as well. Friday we have NFP in the US. Let's see how many jobs are created there. And Sunday we have the Italian referendum. So that could be impacting the euro and other the DAX and other the Italian index, of course, and other financial instruments. That's something we're going to talk about tomorrow. So if you're interested in that, quickly before we head off to the charts, you can sign up for that right here. Impact of Italian referendum on Forex and financial markets. That's tomorrow at 5 p.m. GMT time. But between now and then, there's still Nenet's webinar on range bar trading as well. That's tonight. All right, with those messages behind us. There we go. So, your dollar bouncing to the upside here. I actually wanted to use a different template for today, so let me change that right now. I thought I already had that ready, but basically your dollar making some slight downside, but still bouncing to the upside. I was expecting that bounce or break, actually, right? Those are the decision levels I was talking about yesterday, and it broke above the resistance trend line that you can draw right here, like this, and price making that upside. Although it didn't go as far, there was some resistance, as you can see right here. Price wasn't able to break above that, so there was some pause right there. Also, the Bollinger or the Keltner band, sorry, stopping price right there. So the Keltner band is something that I appreciate a lot because of the fact that it behaves a bit differently than the Bollinger Band. It gives support and resistance very neatly. I'm a big fan of moving averages, but they only show support or resistance. Keltner, like the Bollinger Band, can show both, but I like how it behaves a bit more than the Bollinger Band. If you're interested in that, it's part of the MetaTrader 4 Supreme Edition package that has 100 other features besides this one. So that's very useful. So looking at yesterday, you can see I was talking about this breakout. All right, and price had a follow through of about 50-ish pips. Not a lot of follow through, but enough to get an intraday trade in that upside breakout. So, looking at the euro dollar and the oscillators, I know there are a lot of oscillators here. Forgive me for that. But bear with me as we take a look at some of them, okay? So the top one, the Fisher transform, is a jewel. I think it's really great. It reacts very fast, and I think it's great for identifying momentum. The bottom one, the momentum, it says momentum. It's actually, I think, better to be used as a long-term oscillator. So, this one, the transform is moving up and down quickly, but the momentum takes more time. So the point is that it's good to have one that reacts slow and one that reacts a bit faster. And you can see, it's easier to see dips within a trending environment just using those. The MACD is especially custom-made one that Ned had made, and I'm using as well. The thick bar indicates momentum, up and down, and the thin bar is retracements. And CCI is always generally just a good indicator there, indicating kind of strength and weakness. Specifically, if price is basically either bouncing at the zero line, or if it's if it goes above 100 and goes back below 100, if it goes below minus 100 and goes back above minus 100, in that case, basically you've had an upside and then kind of a failure or a reversal with the CCI. So each has its own kind of role. I'm not necessarily saying that everyone must have 4 on their chart, not at all, but I find it quite useful sometimes to use this view with analyzing technical analysis. So yesterday, when the euro dollar was breaking here, you can see, let's take a look at this moment. Excuse me. Let's take a look. You can see that the Fisher was already crossing into blue, that the MACD was thick blue, the CCI was fine, it was pointing up, it was above zero, nothing, that's just neutral, there's nothing of a warning sign for that. And the momentum just crossed in blue too. Anyhow, it's around the zero line, so that's kind of neutral as well. So neutral, bullish momentum there. And of course, I was adding already some wave analysis yesterday, saying that I think from a support and resistance point of view, a continuation of this is likely. So with that in mind as well, plus of course we had the breakout candle above the trend line. So if you look at those three things and combine those factors, that looks like a decent breakout region, right, with this candle. So so that could have been an entry. There was a bit of wick, all right, that's true. So that could have been a factor to skip it. I'll be fully here transparent. But I think that is a toss-up call. If anyone did decide to take that trade right there, then that would have worked out fine. Now, on a 50-minute chart or 5-minute chart, perhaps, because it's intraday, the other way of doing that would be not to take necessarily the hourly bar, but wait for, that could have been the trigger, right? The hourly candle could have been the trigger. This bar could have been the trigger. And that would have been signal to zoom in to lower time frames, such as the 5-minute, for instance, and then look for a trade. All right, and such a trade could have been there we go. Here the hourly candle finishes. All right, that was the trigger. The signal itself on a 5-minute chart, then these oscillators are very useful. Look at the momentum. That's fully blue. And don't get me wrong, once again, I just want to be fully clear that I'm not advocating to use these oscillators in every single situation on a 5-minute chart in the same way. The trigger, the reason for the trade is based on the hourly and basically the analysis that was done yesterday, right? Don't get me wrong. But when that trigger happens, then to find an entry, this could be a useful method, but it's not something I would use continuously on a 5-minute chart. So with that said, momentum is up. All right, the The CCI I think is fine. It's basically stopping at 100, so it's not crossing below it. Right, that's 100 is a key level, but it's also a 5-minute chart, so I think CCI may be less important there. The MACD, all right, the MACD, as you can see here, has thick red, but as soon as it loses its thickness, the two lines are still above the zero line there, and the thickness here going into thinness. So that could have been a retracement finishing right there on the 5-minute chart. And on the Fisher, we get the signal 1 bar later when it loses its thickness and goes into thin. So you see these two indicating the retracement within the bigger upside of the momentum here. See, retracement, but up. Looking at price action itself, you see bullish price action, right? This could easily be a correction, retracement. And we see bullish engulfing twins here. Moving averages up, prices above the moving average, retracing back to the lower zone of the Keltner. And there was a pivot point as well. So there's kind of, you know, the specifically important, I think, is the retracement of these oscillators within this one. That's and the turn. That's a neat little signal. The rest is kind of extra confirmation. And looking at looking at fractals, basically you see the fractals, these green dots here are indicating that fractals are above the moving averages now. So indicating uptrend too. So, all right, we get the push up to basically R1, where price stops and reverses from there. All right, so R1 target would have given some 40, 45 pips. Stop loss, well, you know, the best one would have been probably below this mid pivot point right here. I can't see mid zero, I think it is. But it could have been even below this fractal, but I think that here would have been probably the best. About 30, 35. But even this fractal could have been used here. That would have reduced it to 27. If this bottom is used, that is highly risky. The reward to risk, however, is great because the risk would only be 12 pips. But it is a very risky one because price could easily still make one more dip lower before going up again. So it could have done easily this before this. But in some cases, the reward to risk kind of justifies that. I mean, you know, in this case, that would have been a decent reward to risk. So that depends from case to case. I just giving the options here. Excuse me. So these oscillators also help with wave counts. For wave counts, you don't need all of them, by the way, but and even for the 5-minute retracement, not both of these are needed. One of those would be fine as well. But basically for wave counts, I use the awesome oscillator, but we could see more or less, you know, pretty good wave counts with this momentum indicator or even the Fisher. You know, the thing is that the oscillators, they show the swing highs, swing lows very, very neatly. So when price basically makes a turn here and goes all the way up here and only makes the return back down here, this can be seen as a swing high, swing low, and that is most likely very high chance that that's one wave on this time frame. If we were to dive into lower time frames, then this would be split into several parts, and we would see more waves within that one wave. If we go to higher time frame, right, we would see that what is a one wave on the hourly is in fact still a correction on this 4-hour chart. And that's also one wave at the moment. This downside, one wave, right? So this upside, one wave on this 4-hour chart, right there. Even this, the Fisher would say the same, but the Fisher is a bit more sensitive. So Here you see a bit of a dip, and that's because on the hourly chart you would see this probably, or even on the hourly chart you would probably see 5 waves like this, looking at this oscillator. All right. So looking at the oscillator gives us a very good indication, a very good clue. You know, how do the waves really behave? What swing high, swing low are one part, which belongs to which, and that gives us also a better idea how to label them. So let's see, we have new pivot points. Just now, 3 minutes ago, price is above the pivot at this moment. And at this moment, I'm a bit hesitant actually on both sides on the euro dollar. You see, it made this upside. It's been, it didn't push as far as I thought it would. But I think that I'm a bit hesitant at the moment. I wouldn't be surprised if price still retraces this maybe support line like this and then still bounces. So it could be a range day today. Maybe like this. Although eventually the breakout to the upside or downside, that's, keeping an eye on these trend lines for a breakout on the euro dollar. At this moment, it does not seem that appealing to me. Looking at these two candles, it looks like bearish momentum is present, but we have price above the pivot point, choppily moving lower. Not a big fan of the euro dollar at the moment, but if it bounces at any of these zones here, that could be a bounce spot, or if it breaks later on above the trend line. Alrighty, pound USD. Didn't really make the break to the downside, made a very strong upside in fact, now also in a triangle. So I'm not a big fan of the pound USD either at the moment. Momentum is still up here on the 4-hour chart. Let's see. Yeah, it's also looks bearish like the euro dollar, but because of these couple of candles, also it's at resistance, so it might fall to challenge support there, just like the euro dollar. But I am not a big fan of it right now, to be honest. Well, if we look at our oscillators here, you can see that slight momentum to the downside here on the 5. That's right. We had some retracements here within that downtrend, and here, and some slight follow through to the downside, but it's been pretty choppy. Euro dollar 2, same thing, red here, and some retracements here and here and here that really didn't go anywhere, just sideways. This most recent one I was seeing some follow through. This was Asian session. But I think at the moment, pivot point is too close. Same for the pound. So I would be looking at other pairs. Let's take a look at the dollar yen. Alrighty, so we see here price basically above the moving average, riding along the Keltner, breaking above it continuously, now making a correction. So it broke above basically this resistance spot, made a retracement in the meantime, engulfing twins here. Dollar yen looks like an uptrend at this point. It had on the lower time frames, you can see This was a pretty sturdy momentum. Broke this trend line. I was expecting a bigger correction. It could still happen, in fact, right? The bigger correction. But at the moment, if I look at the 5-minute chart and look at this upside, it looks like a 5-wave pattern to me with strong momentum here. And this looks like an ABC correction. So I think this is looking like a continuation to the upside. All right, so 5-minute entries, for instance, if we look at one more time at the hourly chart, excuse me, we can see that price is momentum up, bullish, 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 everything is bullish here. 4-hour 2. Higher time frames are up as well. So on a 5-minute chart, turnarounds, potential retracements within this uptrend. Look at this blue here at the bottom. Potential retracements here, as you can see, here and here. So those turnarounds, for instance, would be here and here, somewhere around here. Stop loss would have to be at least below this bottom, or later on would have been here or even here. Those could have been 3 potential entries. I would not take all 3 because they're all in the same zone, but those 3 would have been separate signals. Each of them could have been potentially used as this turns around within this blue upside. Also, of course, considering the larger time frames and the fact that we're in uptrend on higher time frames. So at this moment, the 5-minute is pushing. So what would have to happen is that price basically makes a push, makes some retracement here, this goes back, and then we see another dip. All right, that could be a new way of entering the upside breakout. So the dollar yen looks interesting, and there could have been trades from this 112.70 area. So for new trades, we need to wait for this momentum to finish and retrace. All right, Euro yen talked about that yesterday too, said that this could have been a breakout trade right here on this candle. All right, as it was breaking above this, yesterday we were saying that 4-hour trend is down. That's all because of the fact that this is still a channel to the downside, right? Higher time frame daily chart was up. Hourly was up because price was already making higher low, higher high here. So that was up. Daily was up. But 4-hour was down because of this channel. It depends on your definition too, but that was, you could, argue about these time frames, whether it was the 50-minute down or the hourly up, or but this is my way of looking at it. So still, despite the fact that this was a 4-hour downtrend, we could see that it was choppy and corrective. Okay, and was making kind of a bull-like pattern rather than a strong downtrend at this moment. So when that channel breaks, that could mean that the 4-hour was retracing and that the hourly would be pushing into the new direction. So that's why that was a breakout. The hourly candle could have been the signal or trigger. If it's a signal, it's an immediate entry. If it's a trigger, then zooming into lower time frames would be the next step. And price did make a decent upside, about in one go about 80, 90 pips. All right, there we go. If we're waiting for the retracement here, the first entry would have been on the MACD, and here you can see some difference. And one of the reasons why I have, in this template, I have both on, is because they're not always behaving the same. They have pretty similar viewing points, but they're not always the same. You can see here that the Fisher pushes a lot further than the MACD before it retraces. You see also that Fisher takes some more time before it retraces. MACD does that quicker. So MACD entry would have been here on the 5-minute chart, a bit higher than the hourly. The hourly would have been at the magenta line, as you see. But that's because price basically made a continuation push before we got the retracement at the R1 on the 5-minute chart. Oh, this is not the R1, this is a mid-pivot, sorry. So as price stopped there, then the 5-minute signal came here, the 5-minute signal came here. Those two would have been signals. Stop loss, the nearest fractal here is this one. That's too close. I think that this one would have had to be used. Here, I think the same one probably. Looking at about 17-ish pips. And there's the breakout on the 5-minute chart. So the hourly, once again, would be the signal, the trigger, excuse me, and on the 5-minute chart, the signal could be searched for. But the hourly, as I said yesterday, could be both signal, the trigger and signal as well. It depends. There are multiple ways of tackling the markets, of course, so depends. So yeah, you get the push up first to the R1, then to the next mid pivot point. Those could have been targets. Looking for about 35 here, and then about an extension to the next one would have been 60. And that's about it, actually. Now, how about the 15-minute chart, you might be asking? Let's take a look. 5 is a bit more a bit more quicker, because especially if it triggers on the hourly. If a trigger happens on a 4-hour, then maybe a 30 or 50-minute chart is good. But if trigger happens on the hourly, the 15 could be a bit on the slow side. And here we never really had a trigger on the 50. Before price retraced, it was all the way up here already, before it retraced back here to the 0 line. So the 15-minute chart entry would have been here, somewhere in here, but then the bigger retracement already happened. Now, or was about to happen. Now that could have still worked out okayish. This, putting the stop loss here, in my view, too tight for a 50-minute chart. It's only 8 pips. Yeah, that's too tight. I would definitely go for a fractal further away. This one could have been used right here, this fractal. That probably would have been okay, or maybe a bit better on a 50-minute chart, this one, and also below the M2 on a 50-minute chart. That would have been about 43 pips-ish. A small drawdown, but eventually the turnaround. And anyone in that 50-minute retracement trade here, let me check the Euro-Yen. One second, folks. All right. Anyone in that trade, I think, would be trail stopping. I would go below this bottom here, personally. Just move it to break even at this point. This looks like a small little bull flag, but that would be my take on it because it lasted quite long already. We're looking already at 40 candles on the 50-minute chart. That's more than enough. Otherwise, it's basically taking too long, this trade. Otherwise, the next signal could have been here in this zone, right? Make a turnaround here too. Still slightly up. That could have been another way of looking at it. The next one is actually this candle right now. M3, turnaround on this oscillators. So the entry on this 50-minute candle, we can follow it. I think the stop loss would have to be below the pivot point. So probably this bottom, right here. And these fractals here. This was the trigger candle, about 34 pips. We can still check if the higher term frames look good or not quickly. We see basically momentum up, consolidation, blue, neutral, but two lines are above. CCI is okay. The only thing I don't want to see is that CCI is crossing above 100 back to below 100. It doesn't. It's right at 100. This is up. So hourly is up. 4 hours up. So that should be okay. Well, we will find out. Anyone in that trade could be from here or here could be a break even or use the same stop loss as this one, of course. So this is how oscillators could be useful for signals, triggers, entries, however you want to call it. I want to get rid of this line, but I cannot somehow. One second. There we go. We got a question. When MACD line crosses, is that strong indication for entry? I don't, but what I do use it for if it crosses is momentum. So when it gets thick blue, that's when momentum is starting. So for instance, here on the hourly, the momentum on the hourly started here, especially here, right? So when it's thick blue, that's when the momentum is starting. So this breakout candle definitely had a thick blue. So that was momentum. That was the breakout candle we were talking about yesterday. So this is thick blue. Once it loses its thickness here, it's starting to lose its momentum. So here, this is retracement territory already. All right, so on the hourly chart, just like the 50-minute chart, we see the retracement. This stays blue. And here we see the end of the retracement. So that could have been a 1 hour continuation trade on this candle. So we looked at 5, 15, and 1 hour chart. Now, if I would trade a trigger on the hourly, I would want to make sure that the 4 hour and maybe even the daily on my side, specifically the 4 hour though, for sure. 4 hour and the 4 hour basically wasn't downside. Remember we said it yesterday on the Euro Yen, but we can see that this could be the end of retracement. And indeed, that particular candle here was basically a breakout candle on the 4 hour chart plus a turnaround. Actually, on the MACD already happened earlier. The turnaround happened already on this candle. This is up. This is retracement. And the end of the retracement is happening here and here. So 4 hour, this was down, but otherwise that looked like a retracement. And daily, once again, important enough, was up. Everything is blue here. So daily was up. Yesterday we said 4 hour was retracing probably. This was the breakout candle, but the breakout candle happened even earlier on the hourly, and we had thick blue here. So I don't use it for entries myself when it switches sides, but I do use it for momentum, understanding when when the new direction, when a new trend is available or visible. So in my view, it's really all a question of finding a couple of time frames and looking for the combinations that fit. And that could be, don't use the 1 minute, but that could be on really all of these that I think make sense. I mean, even monthly, we can take a quick look. Not that I use the monthly, but Let's see. We have here on the monthly, we have downtrend from, this is thick red here. This is still up. Takes a bit slow on the monthly here for this to change. So that would have been skipped. So let's take a look if the weekly showed a bit different. All right, for instance, here on the weekly, we have an uptrend here, and you see that price retraced, made a retracement here, and here, and here. So those could have been all dips within that trend. But the monthly was not trending, so I think, let me check. It was up at the meet. It was part of it was up. Part of it was up. This was still slightly down, but this was up. So let's take a look at the daily. Probably the daily chart would have been better because weekly is definitely up. Monthly is mostly up. Oh. There we go. So this could have been a good daily signal when here price made a turn, and here again on this candle. Those could have been potential entries. This one right here would have had to use at least this as a stop loss. That would have been okay. The drawdown would have been survived. The next one would have had this big momentum candle. That would have been a bit, the stop loss would have been a bit too big or quite big, right? Obviously. Beautiful candle, but on the daily chart, quite massive. But all in all, if we look at waves too, if we see a signal down in here, there are good things this is basically indicators indicating the potential turnaround on the daily chart, right? We see that the weekly was up, monthly was mostly up, weekly was definitely up, daily was up, looking at this one, but we're having a retracement on these two oscillators. You see that? And how does the retracement happen? The retracement happens in nice three-wave pattern. And you can see that same thing here on the oscillators, three-wave, three-wave. So yeah, the fact that there's a turnaround in here at the end of that third wave as price goes sideways kind of fits within the technical and wave analysis picture, right? We got a sideways correction, we have a triangle, we have support here, we have a typical ABC correction, and then we would also, if that's the ABC correction, we would expect a turnaround within that uptrend. And price indeed does that classical ABC correction, the turn, and upside. Then a long waiting. So I don't think that would have been able to survive would not make sense to stay in that trade that long. But you got the upside. You got plenty of fractals to move a trail and take that trade. All right, still continues after this long sideways zone. Still continues higher, but that's basically an example of higher time frames. Alrighty. Does anyone have a particular currency pair and time frame in mind that they would like to take a look at? Euro pound? Sure thing. Question about the news today. There's ADP non-farm employment indeed change. That's the day in the U.S. session when there's a positive. When it's positive, is there a bigger chance on Friday's NFP being positive too? I'm not sure about the correlation between those two. I definitely have seen examples where they don't correlate, but although I would not know statistically, if they are really closely connected or not. Unfortunately, I have a hunch that it's not so close, but it's more of a sentiment than something I've tested or read about. Let's see. Aussie yesterday, we're talking about how price made here. We'll go to the euro pound, sorry. Stopping at 272 target that it could break to the minus 61.8. It didn't. Made a deeper retracement instead, but still bouncing off the lower part of the Kellner and the moving average. But more importantly, if you look at these oscillators here, you see that the 4-hour is up here slightly. This is up, this is up, this is neutral. Daily was a retracement, so that daily was is bearish. 1 hour though was up, and here was making a retrace, as you can see. So you can see that the Fisher and the ECS MACD nicely indicating that this candle was the end of the retracement. So that could have been a signal or trigger. And on the eyes, you do get a pretty good upside there. 50 pips bounce as price basically completes an ABC zigzag. Not only that, but there's the fib targets there, right? Beautiful bounce at the minus 61.8 target. So daily was not with us, but the 4-hour was, and the hourly too. So 1 hour trigger or 15.5 could have been possibilities. I like the 5 myself a bit more, and the 5 happened. There we go. The 5 happened. Sorry, let me zoom in a bit. Right here on this candle. On the MACD, it was this candle. And you get an upside. Another additional retracement was here with the signal at the same spot, just a bit later in the time. Now, mind you that the 5-minute world, this momentum was still not up. So, if you were really strict, then this would not be one because this was still slightly down. This would be definitely one here, right here. And you get the upside. Some other potential, but eventually, this is not something that I would keep doing. There are sometimes scale-ins possible if a lot of space is available to the upside, and then some of these dips, these additional dips could be bought. But mind you, each additional dip is less likely to succeed after the first one. Because eventually there will be a bigger retracement, and that's exactly what happened. There was a 5-minute retracement here, and here, and here, but eventually we got a bigger 15-minute retracement. You see that? So then you get stuck if you're in a 5-minute world. And on a 50-minute world, it went all the way back down here. The 50-minute world turned again somewhere in here. Got to check if the trend is still up, right? 15 is slightly down here, so questionable perhaps. Hourly is still up though. Now, would I take an hourly signal? I don't think so. On the daily charts, I've got a doji here. Daily doesn't have momentum up. You see, daily is still more or less down. 4-hour is slightly up. Hourly is double top. So looking at this oscillator, yes, there is a signal here, but I'm not a huge fan of it. I would probably rather just look on the intraday scale and see if there's anything that shows a continuation to the upside. All right, finally the euro pound. Sorry about that. Let's take a look. So if we look at multiple time frames, monthly is up, weekly up, but there is a retracement going on right now. So on a weekly, there could be, if there's a loss of momentum here, that could be the end of the retracement or the end of this first push, and there could be a bit of a bounce. Then in that case, daily is actually down at this moment. It was up. Here you had a retracement. Here. And here. This one, however, here you see prices come back down. So a bit of a mixed picture here daily. The push down is changing things. 4 hour is down with some retracements. Basically, price has been down here. So this was a retracement. This was a retracement. Hourly is a mixed bag. So if hourly is a mixed bag, it's going to be difficult to trade it. So I don't think that daily is down, but I don't see 3 time frames that, kind of converge here at this moment. This is slightly down, but it's really flat and right at the 0 line. 30 is the same. So no, I would wait on the euro pound myself. I don't see something interesting here. Euro New Zealand is an example. Downtrend, for instance. Daily downtrend, we talked about it yesterday too. Hourly downtrend. Now I was waiting for a bigger correction. Remember, I was waiting for price to go up to close to 149.75. Now 150. But it never went there. Went up to 149.50. And that can happen. That's why these oscillators are sometimes good. You had a 4-hour and daily downtrend, but the hourly turned, and it turned right here. That could have been seen as a breakout as well. That could have been a signal or trigger. If it's a signal, then on a 5-minute chart, we can see that was the signal. Sorry, the trigger, and the signal could have been right here, this candle. You see that this one, the Fisher didn't even go back up above the 0 line. If that happens and you go from thin red to thick red, that's still okay. Or here the MACD does go from thick to thin blue. So that's a small little bear flag on a 5-minute chart, and the signal for continuation happens here. This is down, that's good, and these are retracing. You see that? Down and retracing. And this is, of course, all within that 1 hour trigger. And there was 1 hour triggers, maybe here, the slight, yeah, on the MACD it was, and here, all within this downtrend. On the higher time frame, like the daily for instance, retracements happened here, for instance. Here, go back to the zero line. So this could have been a turnaround within the weekly, monthly downtrend. This was a pullback and turn. Here again. Here again. Actually, this one didn't go too far before we got a bigger retracement. So this turned out to be an APC zigzag. But here eventually it turned again. And again. And again. Most of these worked out fine, except this one. And it does depend also on trade management. So those would be daily kind of retracements within this downtrend. So the point is, you know, the strategy idea is basically use the oscillators to define trend, then look for a pullback within the trend. So have a trend on, I mean, it's great if there are two trends on different time frames. If there's a trend on hourly and 4 hour, if there's a trend on 4 hour and daily. If I have two trends, if there are two trends available, on the time frame lower, look for the retracement. So 1 hour, 4 hour trend, look for the retracement on the 5. Or if there's a trend on the 4 hour and daily, look for the retracement on the hourly. So retracement, trend, trend. And that can be done with these oscillators. The extra benefit of looking at the oscillators is that they show patterns, they show what kind of price movement belongs to each other and what kind of waves we can read from that. As extra, right? So I gave plenty of examples already. So, or chart patterns. Wave patterns can be deducted, derived, understood with these oscillators. So to give kind of extra confirmation whether the trade is interesting or not. So this is a strategy I really appreciate because it's trend trading. There's good trend going on if you have it on two time frames. Specifically, if you got a retracement on the lower time frames, like on the hourly, that typically is the spot where price continues, or not. I mean, every time frame, right? So retracement, trend, trend. But sometimes I use the retracement. So let's take a look at that. So we got higher time frame are trending in the same direction, preferably. Then you have this one is this could be the trigger or signal chart, right? Where it's making a retracement and finishing the retracement. Like this. And then the time frame below that, if you're looking at a trigger here, yeah, sure, MJ, no problem. It will be recorded, so and it's almost finished. If you look at if this is a trigger, you can go even one time frame lower and look for the signal there, and look for a smaller continuation. All right, so that's how you can use 4 time frames even, if you want to use the third one as a trigger. So it's one of my favorite methods, and it generates, you know, it's fast, it's clear moments and signals and triggers, and it kind of reinforces, supports my analysis. I do my analysis first. I know what I'm looking for, and if I see the signals at the spots, decision zones that I'm expecting, you know, it's clear. I got the analysis done. I know if I'm interested or not, and then the oscillators help me pull the trigger. They help me understand when you know its retracement is finished within that trend. So for me, that's great. So when I use this template, it's really for trading purposes. Yeah, I could even do a slightly bit of analysis on it, right? It's possible, but mainly trading and some quick analysis with it. The oscillators have a prominent role because they are the prominent part of the trading process with this template. They are giving the signals, they are giving the triggers, and so from that point of view, it makes sense. All right, so this template is more indicator oscillator based, but I think that this particular sequence and formation, you know, is strong, sturdy. Really like it a lot. One of my favorites. So, you know, this particular profile, this particular templates, always high on my list.